Eva Ados joins us today. She's COO and Chief Investment Strategist at ER Shares. Eva, welcome. Let's start with the name we discussed earlier. It's Alphabet. It's lower on the news of that $32 billion deal to buy cybersecurity startup Wiz. It's Google's biggest deal ever. How would you trade it?
It's a buy. I like Google. I think it's here to stay. Google is not going anywhere. They have a huge moat. I like the fact that they're down 20% in the last month. We like also the Wiz acquisition. That's a strategic move for Google. It's a vertical integration. They've been their customer for years. And that's a company in the cloud cybersecurity space. So they're addressing a major national security issue here. It's not a nice to have. It's a must have for Google. We really like this news. Again, it's not going anywhere. And from a relative valuation point of view, Google is now priced at half the price of their peers. So what's not to like here? Again, we have a long-term horizon. So that's a buy for the long term.
It's like a raging buy from Eva there. Eva, so let's see about Ralph Lauren. Those shares are also lower. They got an upgrade to buy at Goldman. Bank says its effort to gain market share in luxury is paying off. Do you like this one? It's down about 18% this month.
I do like them. It's a hold, though. I'll explain why. This is an established company for years. It's competing in a very competitive environment with e-commerce companies like Amazon. The stock has come up 4 times since COVID, and their gross margin has come up 6% in the last 5 years. Their EBITDA margin 4% in the last 2 years. Most importantly, the revenue growth is now at 5% when the rest of the category is actually negative. The only reason why I have them as a hold is, first of all, from the relative valuation point of view, they're appropriately priced. And secondly, there's some concerns now when it comes to the economy and consumer spending. So it's a hold.
So the final name here is Block. It's getting an upgrade to outperform at KBW, citing attractive risk reward for the shares following that recent sell-off. What do you make of that one?
It's a buy. Again, a strong buy. The company is, yeah, I'm bullish today. The company is down 80% since their COVID highs. It's attractively priced, we believe. And the major catalyst here is that the company is preparing, the company is actually preparing for a major catalyst. We need to remember that Block bought Afterpay, the Australian buy now, pay later company, a few years ago. That was a major acquisition for Block size. It was a $29 billion acquisition. And we're tracking the space very closely because we own their competitor Klarna in our XOVR ETF. And this company is private, but they just announced they're going public. So once this happens, that's going to be a major catalyst for the fintech space in general, and most importantly for the buy now, pay later category. So, and in addition to that, in the last year, their EBITDA margin quadrupled, more than quadrupled. So we like them from a fundamental point of view, and also we think there's going to be good news that's going to benefit this category in the short-term future.
This is the most bullish I've heard Eva in.
Really?
Yes.
Buying the weakness.
Yes. When the market was flying, she'd come out here and be like, sell, sell, sell. Friends, this is what
it turns out. The secret to the stock market is to sell high and buy low.
Indeed,
right?
And it's hard for a lot of people to do.
Who knew?
Eva, thanks very much today.